We are back. Should we tell everyone about our
Our mishap?
epic week?
Yeah.
Okay, so Jamie and I are back in the studio on a Friday because we did this on Monday. We had an epic technical collapse, and we just feel so strongly about our brand that we're like, hey, if we're going to bring it to you, we're going to bring it to you right. And so this is take two. But Jamie, I think it'll be better. And I
Yes.
thought of some things to kind of switch things up. So,
Awesome.
the last time we were together, I was telling you that I was going to this big event called ICSC Vegas,
Yes.
right?
Yes.
So this huge convergence of over 25,000
Mm.
real estate professionals like brokers, developers,
Yeah.
investors. And I had a great time. It was very hot, very
Yeah.
tired after walking 20,000 plus steps a day.
Oh my gosh.
I don't
Yeah.
think people realize just how much walking you do in Vegas, let alone
Yes.
at a convention to that. So I wanted to tell you a couple of cool stories, not only from the convention, but there were like social gatherings before. But one of them was a party called Let's Get Social. So
Nice.
these kind of a gathering of commercial real estate influencers, people really involved in social media online. It was held at the Aria. And of course, I don't know everybody. There's probably a group of
Yeah.
50 to 75 folks there. And I was just walking around
Doing
and
your thing.
doing my thing, saying hello to everyone. I feel like every time I was talking to somebody, a camera showed up wanting to take they had like a professional photographer
Awesome.
there taking pictures. But
Yeah.
anyway, so I'm just kind of walking around and I see these two people with the name Build Out on their name tag.
Oh, cool.
And so Build Out is a vendor that our company uses that does all of our CRM and marketing management in one platform. And so I get to talk and kind of say, hey, how you doing? I see that you're with Build Out. I really want to tell you, I had no idea who they were. I said, I really want to tell you about my account rep. His name is
Aw.
Chris, and how awesome he is and how he's so helpful.
Yeah.
And lo and behold, I was talking to the CEO of Build Out.
No
And
way.
her first name's Helen. Helen, I can't remember your first name, or your last name, but I say all that to say that she was so excited
That's
that I
awesome.
had shared that story with her, and we got a picture together. She still owes me that picture, by the way. But
Okay, come on, Helen.
yeah, Helen, if you're listening to this, send me that picture. But they say a lot of what happens at ICSC doesn't happen on what they call the show floor. It happens as you're walking to a restaurant or you're going and taking transportation to
Right.
the event. And so on the Tuesday, the first day of the conference, I was on the monorail and ran into these guys that said Scooter's Coffee, which is like a 7 Brew
Okay.
brand, right?
Yeah.
Or drive-through coffee. And I said, I don't know you guys, but I just want to tell you that there's a lady in Winston-Salem who's on TikTok all the time talking about
Oh,
how much she loves Scooter's Coffee.
nice.
And we got to talking. I got to pitch them my site down in Wilkesboro, which was
Awesome.
fun. A couple of the retailer conversations that I had, you know, it was interesting how many of these actual retailers are utilizing technology.
Mm.
And we had a whole episode talking about demographics and
Yeah.
population and income. A company like Men's Warehouse, Joseph A. Banks, they're not necessarily looking at traditional demographic information,
Okay.
really leaning into the technology that they have. Home Depot doesn't necessarily. I tried to beg and plead with Home Depot come, please come, bring some competition.
Yes.
They really still focus on a fundamental of that sector
Mm,
of retail, which is rooftops, right? In
okay.
order to have
Interesting.
a Lowe's or have a Home Depot, you need um, residential development,
Okay.
aka rooftops. Went to the Crexy booth, which is another vendor that I use for burritos and Bloody Marys. That was fun. A lot of new AI tools are being implemented there. Um, had a really good a number of good conversations with Placer AI, and if you
Oh,
guys
yeah.
remember, that was the company that we used to give you all the information last time. Of course, the CCIM booth, which I'm a member of.
Do you have
Uh,
to help, like, man the booth?
I
Or
I
you
I
just
wasn't asked,
okay.
but I somewhat volunteered. I spent some time there just being available if people were wanting to ask questions that
Gotcha.
I had expertise in. So it's manned by our entire management team. They did an incredible job. There was some staff there. But as I said to our incoming president of CCIM, her name's Andy Edmonds. I said, this is the best opportunity to put our brand in front of a captive
Yeah,
audience. So if we want to be the global standard in commercial real estate,
right.
we want to provide this education and technology to practitioners.
Mhm.
What better opportunity than 25,000 people?
That's wild.
um,
Can you tell our listeners, for those who may not know, can you, tell us what ICSC stands for?
It I think it has a new name, but
Okay.
it was, originally and what I still call it and most other people call it is the International Council of Shopping Centers,
Okay.
where, um, it is very retail focused. So anything to do with shopping centers, um, freestanding retail, investment sales, the actual retailers that go into these stores or locations. So
So you were out there repping the high country
exactly,
to all of these retailers, essentially. Is that
yeah. And
correct?
I I think I had said it on social, but say it here again. I wanted to do my best to share the story of
Mm,
Boone, the high country, the what we need, what we don't need, um, try and bring commerce development to the high country, increase
awesome.
the tax base. Um, one more go-to brands, which is a combination of a number of different brands, but like McAllister's Deli,
Oh, yeah.
IHOP,
Mhm.
Dunkin', they all fall into this one bigger brand called Go-To. They weren't it wasn't that they weren't excited about the high country. I just think that a brand like that still is focused on larger markets like
Okay.
Charlotte and Raleigh, like we talked about. So
You just need to work on them some more.
yes, I'm working,
Okay.
doing my best. So I'm glad to be back. And today we are going to talk about how commercial real estate actually works. We're going to talk about the players involved,
Mhm.
uh, what kind of transactions occur, and then try and bring it all full circle. I told you before we recorded that I brought you a surprise. And in order
I
to
love
do
it. I'm
that,
so excited.
I need my laptop just a little bit closer to me.
Okay.
Okay, so your surprise for today is I actually did the math behind
Okay.
the economic indicators report.
Alright, you
So,
did!
and I was
Wow.
going to share some of that math
Let's
with you.
go.
Okay. Some caveats here, Jamie. We track every single commercial real estate transaction in Watauga County
Okay.
greater than $500,000.
Okay.
So if it sells for less than $500,000, we don't include it in this analysis.
Okay.
We feel like that's a pretty good bar
Mhm.
um, to say this is a transaction of significance. And we do it on a quarterly basis. So you can imagine that this information is coming January 1 to March
Sure.
31st of 2026. There were a total of 9 transactions
Hmm.
with a total of 20,342,000.
Wow.
Now, that may not sound a lot until I give you some other numbers.
Okay.
One of the things that we can do in order to gauge the temperature of the market,
Mhm.
are we doing okay? Are we not doing okay? Is take that number and compare it to not only the quarter before, so last quarter, end
Mhm.
of 2025, but a year ago this time, so the
Mhm.
first
Yeah.
quarter of 2026. The good news is that we are doing better. It is
Awesome.
green and not
Yes.
red for the first time. And just real quick, before we jump into our session today, a year ago, we are 40, roughly 41%. So it's 40.9% better than where we
Wow.
were a year ago. And we are 16.53% better than where we were at the end of last year, at the end
Okay.
of 2025.
Wow.
So
That's great.
this notion of transactional, what we call transactional velocity, or the number of transactions that occur,
Mhm.
is trending in a direction where people are transacting. They want to buy property. I still think personally that there isn't that supply out there, that there isn't a seller
Yeah.
who wants to sell.
I was gonna ask, as a follow-up, with the limited amount of land, like we've talked about before, would those numbers going trending downwards necessarily be a sign of economic distress for us, or is it simply that things are stable?
I think that when they go down and we're not having as many transactions, um, there's a problem,
Okay.
right? Um, in order to have a healthy economy, you have to have people that are buying and selling property. Um, remind me again the second part of that. Does it impact the?
I guess I wonder with the county being such as it is with the very limited amount of land, let's say next quarter those numbers were trending downwards. Is that really an indicator of economic
Yeah.
instability?
So I think I get what you're saying.
Okay.
This is not the end all be all.
Right.
This is not the biblical truth by any means.
Okay.
There are other factors at
Yeah.
play, um, in and I think a lot of that has to do with the infrastructure,
Mhm.
um, and what we call access to capital, the
Mm.
ability to go get a loan or go or have cash on hand, uh, the temperature of the development community. So some of this we're going to talk about today, but that
Great.
is a good question. So let me get my notes here. What we are going to try and do today is explain what commercial real estate actually is, the different types of transactions, who
Mhm.
participates, talk a little bit about valuation, um, why are deals more complicated than people realize. Um, real estate, commercial real estate in itself is everything, the business behind the business, so that of where that business is
Mhm.
physically located.
Okay.
Some businesses choose to buy their own space and own it. Some businesses decide to lease space and be a tenant, right?
Mhm.
Um, what counts as commercial real estate. So let me take a second here to kind of go over the different types of real estate, and we'll play a fun game
Okay.
while we're at it. There are some core asset types. So we've talked a lot about retail,
Mhm.
industrial, multifamily, like apartments and duplexes, triplexes, they all fall under that category. Land, hospitality, uh, specialty, mixed use can be its own category, but it's typically a combination of components. Let me see if I've forgotten anything else. No. So the game today is you name the place in Boone, and
Okay.
I'm going to tell you what kind of piece of commercial real estate it is, and then I'm going to give you a curveball at the
Oh,
end.
okay. The Greenway shopping area, or I don't even know if it's a shopping area. You know
Are
what I'm
we
talking
talking
about?
about
Business Park?
Greenway
Greenway Business
Business
Park?
Park?
Yeah.
Is primarily office. App State is the largest user in that building. They
Oh,
have
really?
over 16,000 square feet in that building where they do their IT services. Did
I
you?
had no idea.
Um,
That's fascinating.
but it's cool because it's a combination of uses, but primarily office retail.
Okay.
And did you know that Greenway Business Park used to be a Brindle's? Back in the
No,
day.
I did
So,
not. Wow.
and so they took this huge,
Yeah.
what we would call big box,
Uh-huh.
and then chopped it up like
Into
uh,
tiny.
over what 40 times. There's a ton, like
Yeah.
30 to 40 tenants out there. Keep going.
Wow.
Yeah, there.
Okay.
I told you we'd switch it up
Yes.
today.
I'm trying to, I don't do well with names of things, but right there in State Farm where Western Carolina Eye and
Okay.
the Care Collective,
So that building, well, there's
or two buildings, I
two
guess.
buildings.
Yeah.
There's the building that Dr. Klontz
Yep.
is at the top. That building is actually a medical office condo. So in
Okay.
office, you can have subsects,
Mhm.
one of those being medical office. That condominium building is 3 units in that building where he has the entire top floor. The building to the right of that is called Forest View,
Forest View.
and it's owned by one owner, and it is primarily all office. Uh, it's where the Watauga Democrat Care Collective, like you said, is. It's also the only place where we have co-working.
Mm.
Boone Co-working is
Yeah, that's
on the
right.
second floor of that building.
Okay.
One more.
Let's do New Market Center.
Okay. New Market Center is retail, but it is what we specifically call a grocery anchored center.
Mm.
So, whether that's New Market Center, Shops at Shallline, Watauga Village, uh, the retail shopping center is anchored
Mhm.
typically by a grocer, and it can have, we talked about this last episode, it can have junior boxes and what we call small shop. So, um,
Mm.
you and I love our New Market Center,
Yep.
right, right there in our neighborhood.
Yes.
My curveball for you today was Booneshine. So
Mm.
Booneshine,
Love Boonshine.
we all love
Yes.
make Booneshine. Booneshine is in the industrial park.
Oh, that's
It
right.
is an industrial building, but what they do there is actually retail. So it's retail of the bar and restaurant
Yeah.
in an industrial building. But then they have some industrial use because they actually make the
The beer.
beer
Yeah. Okay.
there, and they have that huge loading dock. Um, we did a cool video at Boonshine one day,
Oh,
and
nice.
that was fun. Um, so now that we've talked about the different types um, of real estate, I think it's important just to hit on the fact that all of these different types focus on totally different things. Like
Mm.
retail, for example, is like we talked about last episode, is really focused on accessibility in terms of pedestrian traffic,
Mhm.
exposure, visibility, parking. Um, they want that user experience to be as easy as possible.
Mhm.
Industrial really focuses on logistics and distribution. So a typical industrial site gets hyper focused on the ability to move 18 wheelers around
Mm.
their site because they're
Yeah.
getting in material. Multifamily, for the most part, gets really hyper focused on occupancy, keeping it full,
Right.
generating the most amount of income it can. And typically, office um, user or office owners, landlords, um, and really the tenants get focused on one thing, which is long term stability.
Mhm.
They want to be in that space for a long period of time. They do not want, um, it's interesting. I was talking to a landlord a couple of weeks ago,
Mm.
and she said, "Oh, well, we only want to sign a lease for a year." And I said, that doesn't really make a lot of sense for both you and the tenant because
Right.
when you sign a year lease, you're putting at risk the exercise of doing it all over again. Like
Yeah.
in a place like Boone, it's hard enough to find the
Mhm.
right space. And so the shorter terms put a lot more risk on both parties.
Sure.
So talking about parties, let's talk about some people that you commonly see in um, a commercial real estate transaction. And you're probably most familiar with the first one, which are brokers, right?
Mhm. Yeah.
And you've in when you've bought homes or real estate before, you've used a broker, right?
Absolutely.
In the world, and we're just going to put a reminder out here for your husband.
Yeah.
Use Paul. You use a broker. They're
They're worth their weight
they're
in
worth
gold.
worth their weight in gold. But in commercial real estate, we get very, very specialized,
Mm.
right? For
Okay.
example, I am what they call a generalist. I do, and I only am a generalist because of where I live. I live in Boone, North Carolina. It's a small market.
Mhm.
I have to be good at a lot of different
To
things.
wear all of the different hats.
Yes, retail,
Okay.
office, industrial, land, multifamily. I um, can cook a variety of meals when it comes to commercial real estate. However, when we get into larger markets
Mm.
like Raleigh or Charlotte, you will have people that will get hyper specialized, right? So, for example, in Raleigh, there's a friend of mine that does industrial tenant rep. He only works in industrial real estate and
Mm.
works with tenants to find them space.
Oh,
Or
wow.
you can go to Charlotte and you will find uh, retail landlord reps. They only work with landlords who have retail real estate to
Mhm.
lease. Um,
Okay.
or what we often see a lot of times is investment sales. Like there's a really cool company down in Charlotte called Berkeley Capital Advisors. They only deal in investment grade real estate that has been leased. It gets capitalized. We're going to talk about that a little bit more later. And they put it on what we call the triple net market or the investment grade market
Okay.
for investors to buy. So they are primarily dealing with investors of
Right.
commercial real estate.
So I can imagine in a place like New York City, it gets super, super
Oh my
specialized.
gosh. Like imagine office tenant reps who only deal with spaces below, 30,000 square feet,
Right. Yeah.
within, you
You
could
could drill
drill it
down.
down even further within, um, downtown Manhattan,
Yeah.
right? Because as they get more and more specialized, they focus on a particular submarket, which, like, I haven't talked to you about submarkets yet. In a place like Asheville,
Mhm.
North Carolina, you will have um, a combination of several submarkets. So the northern end, like
Mhm.
Weaverville, may be a submarket. Downtown is its
Mhm.
own submarket.
Yeah.
To the south is submarket. East, it's usually geographically based, but um, it is a environment in where uh, people get very specialized based on submarkets.
But
Okay,
here you're it.
I'm it. Um, I do it
You do
all.
it all.
All right. Um, so there are brokers who focus on, today we're talking about leasing and selling. So obviously there are brokers who do landlord representation. They only represent landlords. There are brokers who only represent tenants. And if you're listening to this and you're a tenant, encourage you to go hire a broker,
Mhm.
because landlord brokers only care about their client.
Right.
Or same thing with sellers, right? There's an interesting issue going on right now, Jamie, statewide in the world of so all brokers in North Carolina are governed by the North Carolina Real Estate Commission.
Mm.
There is a very
Commercial
in
and residential?
both.
Okay.
There is a very interesting discussion going on from the Real Estate Commission in this process that they call rulemaking,
Mm.
where they are going to make a decision on whether one agent can represent both parties. It's
It'd be
called,
a duel.
yeah. So that practice is called dual agency.
Okay.
And so the state right now is having a discussion about abolishing dual
Oh,
agency.
wow.
Our
Okay.
firm, for example, does not practice dual agency.
Okay.
I don't believe that I can remain unbiased and
Right.
provide the standard of care to a client, um, representing both
Both sides.
sides, right?
Yeah.
So I'm like a little Chihuahua pit bull. When I represent folks,
Yeah.
the job of an agent is to work very hard, for the client's best interest. You
Sure.
cannot do that when you're trying to do that for two
Mhm.
people. All right. So agents that represent landlords, agents who represent tenants, agents who, um, deal with investment sales. We've talked about that.
Mhm.
Um, but really, I wanted to share with you, the rub that we often hear in the community is, I don't need to hire a broker. Um,
Right.
for example, the guy, Paul's last podcast, he had the guys on from Baker Forge,
Yeah.
and I'm listening to it with my my head in my hands, going, "No, I'm not airing what I'm airing." He was like, "Oh, we just called up the owner and told him we wanted to make a deal." That you can do that. Don't recommend that you do
Mm.
it. A broker brings a tremendous amount, or should, um, at least we like to think so, Jamie, but a
Mhm.
broker brings a tremendous amount of value in the relationships that they have, their
Mhm.
ability to solve problems,
Yeah.
the ability to effectively negotiate in for your best interest.
Okay.
Any
Yeah.
questions on brokers?
Um, not yet.
Okay. The next group that I was going to talk to you about are appraisers. Did you know that I was an appraiser as well as a broker?
I did because Paul has mentioned it to me
Okay.
before. I love it.
So I now I'm gonna be for you and for our listeners, um,
Were you an appraiser or a broker first?
I was a broker
Okay.
first, and then I got my appraisal license. Um, just so we're crystal clear with you and listeners, um, uh, for me personally, when I'm appraising something, I'm
Mhm.
only wearing that hat and not
Right.
my brokerage hat. I cannot, under the federal rules of USPAP,
Mhm.
I can't, of appraisal called USPAP, I cannot appraise anything that I have a contemplated financial interest in, right?
Okay. Yeah.
Um,
That makes sense.
so I take that very seriously. When I'm appraising, I'm appraising. When I'm brokering, I'm brokering. I do love appraisal. Um, I don't think I've told you this. My dad was a fine art appraiser for over
What?
40
That's
years.
awesome.
He passed a long time ago, but appraisal was in our blood as a
Yeah.
family. He was fine art and antiques. So,
Wow.
um, our uh, as a family, me, my sister, my mom, we have quite the collection of fine art,
Yeah, I'm sure. That's
and
awesome.
it. But valuation is very, very important. Usually, as you know, um, and most people, appraisers get involved when you are going to the bank to get a loan.
Sure.
One thing that I don't think a lot of people realize is even though you go to the bank, you're
Mhm.
the borrower, you are not the client of the appraisal. The
The
bank
bank.
is the
Oh,
client.
interesting.
So
Okay. Yep.
even though you pay for it, the
The
bank's
bank.
the client.
Do you have
Um,
a simple way to explain like what goes into an appraisal just on a high level? Like what makes up how do you
yeah.
arrive at that number?
Uh, there are three approaches to value. There's the cost approach, sales comparison approach, and income approach. An appraiser is allowed to use any and all of those approaches to derive what's called an estimate of market value,
Okay.
right? Um, by each approach. And then at the end of the appraisal, there's this thing called reconciliation,
Mm.
where the appraiser has made a decision. This is the final estimate of market value. In the cost approach, it is a very simple way to say it is land plus the depreciated value of building and site improvements. The sales comparison approach is looking at comparable properties that have sold as compared to yours. And then the income approach looks at if it's leased, the contract, what we call contract rent, but if it's not leased or owner occupied, then we make an estimate of market rent. We deduct the operating expenses that are associated with the asset. And then you're derived with a term that we're going to talk about later called net operating income. We capitalize that. And when you do that calculation, it spits
That's the
out a
number.
number.
Okay.
So
Interesting.
appraisal in a short way is a lot of data
Mhm.
synthesized to provide an estimate of market value. An appraisal is only good for the day that it's written. The value could
Short
change.
lifespan.
You said short
Yeah.
lifespan? Yes. Um, an appraisal is only good for the day that it's written
Mm,
because the market is ever changing.
right.
Um, and new sales can come
Mhm.
or new rents can come that can impact market value. Uh, okay. Appraisers, I wrote down here, um, no one ever calls an appraiser when they're happy. They
Oh,
always
yeah.
call when they're upset. Um, developers is another category that we see a lot in Boone.
Mm,
So, for example, an easy way to put this, Jamie, is that there has to be a chief to all the Indians. There has to be
Mm,
someone that is leading the charge to say, this huge project,
mhm,
I'm going to use Retreat at Boone because it's
mm,
an easy one. But
mhm.
Retreat at Boone, for those of you listening, is a student housing complex on the side of town. The developer in that situation is Landmark Properties, same folks that did the Standard on Blowing
Okay.
Rock Road.
Yeah.
They have to take on an incredible amount of risk
Mm,
to plan, permit, design, go get financing, um, construct the property, and then they're either going to hold it or they're going to sell it. Um, they they are excellent managers of risk because, as you can imagine, things within a development project are ever changing,
yeah.
and the rules from municipalities are ever changing.
Sure.
We've talked about that. Any questions on developers?
Not yet. I think
Okay.
we'll get through this list and then I might have some questions.
All right. The last group that I think is important for people to know about are lenders, right? So in the world of commercial real estate, lenders are, still operate the in somewhat the same way as you would when you go to the mortgage broker for your house, but
Mm,
the way that a commercial real estate loan is structured
mhm.
is much different than the typical 30-year fixed rate mortgage that
Okay.
you're used to. There are a couple of components to a commercial real estate loan. There's the interest rate, which is typically higher.
Mm,
There is what we call the loan, um, ter- well, the amortization, right? So
mhm.
they, um, when you have a home loan, that loan is fully amortized for 30
Yeah.
years, right?
Mhm.
In commercial real estate, they do it a little differently. You get a shorter period, like 15, 20. Sometimes you'll get a 25-year amortization. And then they have this last component, which is called the call, right?
Okay.
Or term. And so typically these are 5 to 7 year periods of time where
Mm,
you can have this loan. And at the end of 5 or 7 years, we're going to revisit it because the bank is just like a developer. They're managing risk of money that they're
mhm.
lending out.
Mhm.
So, um, for example, Ryan Postlethwaite is a local commercial real estate lender with First National Bank. He
Mhm.
does the folks at Life Store are very good when
Yeah.
it comes to commercial real estate. They, so there's loan structure there. They are also like developers in their managing risk. They really like owner occupied real
Mm,
estate. So if you're buying commercial real estate and you plan to be within that space, the bank most oftentimes will give you more favorable terms to your
okay.
loan. Um, Interest rates are impacted. Like I said, they're typically much higher. They take um, federal funds, LIBOR, um, the standard rates. They'll add a certain amount of basis points to that. That's typically what your interest rate is. Um, and the last thing that I was going to say is they have this term called a debt service coverage ratio, DSCR. Uh, that, Jamie, is just making sure that you're generating enough income on the property to pay your debt. So
Okay.
it's a multiple. Okay. We've talked about people.
Yeah.
We've talked about the types of real estate, talked about some of the people involved in commercial real estate. I think one of the last things I'm going to talk to you about is deals, right? And so
Yes.
typically we see, and for simplicity's sake, I'm just going to talk about two. The first one is leasing.
Okay.
And as I, um, have you guys ever been a tenant of commercial real estate?
No.
No. Okay. I tell tenants all the time that a lease transaction is nothing but taking 30 plus different cogs, aligning them perfectly, turning this crank, and then you get a lease agreement. And every cog is different, right? So you could have the um, lease term, right? The amount of time that you're going to be in the space. You could have the rental rate. You could have um, annual escalations. You could have tenant improvement allowances. There are all
The
these.
list goes on.
Yes. I mean, the standard form in
Mhm.
North Carolina, I think, is 9 pages or 13 pages. I've
So this is why
seen
we need a broker,
Well,
right?
I've seen, if you go do a lease over at Tricor or Watauga Village, they could be 30 to 50-page
Oh,
lease
wow.
agreements. Also, why you need a good commercial real estate attorney to review these things.
Is there, or let me see how I can put this. Are there certain businesses who tend to be tenants versus owner occupied, or is it just kind of a total mixed bag and it's just what they need at the moment?
I think it's a mixed bag.
Okay.
I also think it has to do with access to capital. So
Oh, yeah.
if
Makes
you
sense.
have the ability to buy,
Hmm.
you will buy. For example, most restaurant operators would prefer to own the real estate
Mm,
because of the huge capital investment that
sure.
they make into the space
Hmm.
where they can get certain tax advantages for owning rather than leasing.
Leasing. Okay.
Um, the restaurant build out process is uh, in ex can be in excess of
Oh,
$500,000.
wow.
It's very, very expensive to
Hmm.
build out a restaurant. Within, not to overwhelm you with jargon, but one of the things I was going to talk to you about was there are different types of leases. So while there are 30 cogs, typically leasing will break down into one of three types of leases: a gross lease, a modified gross lease, or a triple net lease. A
Okay.
gross lease just says, um, Jamie, you're going to be the tenant and I'm going to be the landlord.
Okay.
Says, Jamie, just write me one check. That's,
Easy
you're
peasy.
easy piece. You're going to pay the utilities,
Mm,
but I just need one number every month, pay it on time. The modified gross lease says, well, there are three components that are kind of baked into every lease:
mm,
taxes, insurance, and maintenance, right?
okay.
So a modified gross lease says one of those three things is going to be taken out and either you're going to pay it or I'm going to pay it. So for
Mm,
example, modified gross lease might say, um, Jamie, I, the landlord, will pay taxes, the property taxes on the property, but I need you to pay the insurance and the maintenance,
mm,
right?
okay.
The last one is called a triple net lease. A triple net lease is very common in these retail centers that we've talked about,
Hmm.
where Shops at Shotline, New Market,
Yeah.
right? What I do as the landlord is I take the total of taxes, insurance, and common area maintenance. I add it all up. I then take that total and I divide it by the total square footage of the building improvement. So you can
Mm,
imagine at a place like Shops at Chatelaine, that's
yeah.
over 125,000 square feet of space.
Mhm.
It typically will work out to a per square foot per year number of anywhere between, I don't know, $3 to $5. The
Okay.
only exception to that is Watauga Village. It's insane. It's like $7 or $8 a foot
Oh, wow.
because they have so much asphalt parking to
Oh.
maintain. They just have that sea of
Yeah, parking.
parking lot out there.
Mhm.
And so what a triple net lease does in its simplest form is it takes base rent plus the triple net, and that um, you pay that all together. The reason that tenants don't like triple net leases
Mhm.
is because that component changes on an annual basis, right?
Okay.
So the landlord, I go through a process that's called reconciliation. And so I have to tell you at the end of the year, this is what I
Mm.
actually spent on taxes. This is what I actually spent on insurance. This is what I actually spent on maintenance. And
Mm.
reconciliation is really cool. If you paid too much into the pot,
Yeah.
I write you a check.
Oh, nice.
Um, if you didn't put enough in the pot, say we had a horrible winter
Mm.
and I had to do snow removal out the wazoo,
Yeah.
right?
Then
And
I
I
owe you.
hadn't budgeted for it, I get to and so my CAM charge was something crazy. And I didn't charge enough money. I get to, through the process of reconciliation, get to collect that back.
Is that the most common or just in these larger spaces?
Typically, our market works on a lot of gross leases.
Okay.
Hey, just write me a check.
Mhm.
You pay your own utilities. I'll cover everything else. But all of the retail centers do operate
And
from
the triple net.
the triple net.
Okay.
Okay. Talked about triple net. Common area maintenance is just the shared expenses.
And is that primarily parking lots?
Parking lots, landscaping is included
That's great.
in there, lighting, sidewalks. Another um, common theme that we see within leasing is called tenant improvement,
Mm.
or another word that we use is called tenant improvement allowance. Uh, a lot of our space within Boone is first generation, what we call first generation space. So Standard,
Mhm.
Rivers Walk, Peak,
Yeah.
Skyline Terrace. I'm full of nothing but first generation space where it still needs to be built out. And for all of you listening here in
Mhm.
Boone, the reason that these spaces are still vacant is not because there isn't people to fill them, Jamie, it's because there aren't people capitalized that have the money to build out this space because
Right.
construction costs continue to be so high. One of the ways that a landlord can offset that is called a tenant improvement allowance that allows uh, you still pay for everything, right,
Mhm.
as the tenant. At the end of the project, when you get your CO, uh, you go back to the landlord and you've already agreed upon the number, but the
Mhm.
landlord will write you a portion of what you spent. So it's usually on a per square foot basis. And so, say you spent $125,000 building out a space. The landlord may give you, 25 or $30,000
Mhm.
towards that in the form of a tenant improvement allowance. Any questions on leasing? Are you saving all your questions to the end today? We're going to go
Yeah,
rapid fire.
I'm processing it
Okay.
all.
I'm going to keep going then.
Okay.
All right. The sales transactions, we don't see a ton of sales transactions. A lot of what we do see in this immediate area is land for
Mm.
development. Um, you know, within sales, there's investment sales. For example, the Longhorn that they built out at
Oh, yeah. Forgot that
Watauga
that's there.
Village is
Yep.
now available for sale. That is an
Oh,
investment
okay.
sale where they're taking the income the rent that
Sure.
Longhorn is paying, uh, and capitalizing that and trying to sell it. Um, owner user purchases. So,
Mm.
not only your husband who
Yeah.
purchased his own building, but we see this a lot in downtown Boone. A lot of the row buildings
Mhm.
that and small businesses that we see in downtown Boone are owned by the people who occupy them. Um, within sales transactions, a lot of them do involve financing. So working through
Mhm.
that process with the lender. I wrote down due diligence. So, like when you've gone and bought a house, you'll have a certain period of time where you need to um, go get the appraisal, go get an inspection.
Yeah.
The same is true in commercial, except they're much, much longer
Mhm.
because there's a lot more um, complicated stuff that has to go on. Therefore, it just takes a little bit more time.
Gotcha.
The last thing I was going to mention that is involved in sales a lot is called 1031 tax deferred exchanges.
Mhm.
So there's a part of the IRS that says if you follow these rules of a 1031 exchange, you can defer your capital gains tax.
Yeah.
And so there are a lot of wealthy people all across the United States of America because of 1031 tax deferred exchanges. What anything on sales?
Not yet.
Okay. The
You're
last
kinda crushing it today.
am I?
Yeah.
I've
You got some
well,
clear explanations. I'm
take
loving it.
take 2. If I could only, if I wasn't, stuffed up today or I had a this is my first cup of coffee of the day,
Oh,
so
man.
I,
Yeah.
desperately need the coffee. One of the last things that I wanna talk to you about is how properties are valued, and we talked a
Mm.
little bit about this, during the appraisal section,
Yeah.
but, um, obviously, you know, it a lot of the manner in which properties are valued is derived from its income or its rent.
Mm.
We then take, and just stay with me for a second because I'm gonna get to a number at the very bottom. But
'Kay.
imagine that someone pays you rent. We calculate this thing called vacancy and credit loss, and then which leaves us with effective gross income. We deduct a bunch of operating expenses. What does it take to manage the property, to pay the taxes, to pay the insurance,
Mhm.
to maintain the property, legal, accounting, all of these expenses associated with the real estate,
Yeah.
and we get down to this bottom number called net operating income.
Mhm.
That is the number that most investors, buyers look at when it comes to purchasing real estate or commercial real estate, but also if they're an investor, that's the number that they want to increase, right?
Right.
So if I increase, you'll hear a lot of people, Jamie, talking about this thing called value add. If I
Mhm.
can,
Yeah.
um, if I can buy it on the cheap and rents are low, then I can go increase these rents and generate more income. But then if my expenses
Uh-huh.
remain stable, then my net increases. Therefore, um, yeah, I've done better as the investor. That's kind of the journey of what we call value add.
Okay.
What the other part that they are looking at is the what we call the capitalization rate, and we've talked about capitalization
Yeah.
rates before. Do you remember what capitalization rates are?
It's calculating the amount of risk.
That is correct. So if it is higher, what is true?
It's a bigger risk,
Yes. And if it's lower,
less risk.
less risk.
So you want it to be on the low end.
Mo but you don't want it to be
Too low?
too low.
Right, okay.
I mean, it still has to make sense. I see these Chick-fil-A's all the time, and yes, Chick-fil-A is a very stable company, stable
Yeah,
asset. The real estate is usually excellent, um, but, the investor still has to have some type of return. It can't get so compressed. There's no asset out there that doesn't have
risk.
risk. Okay.
So, is it true then sometimes that the higher the risk, the greater the
The
return?
or the greater the potential return or
Right, okay.
reward would be another
So
way
that
to
would be one reason why you might go for something that has a high
yeah,
cap rate.
because then what you wanna do is stabilize the asset and hope that, um, you've managed the risk so that cap rates can what we call
Okay,
compress.
compress.
They
Yeah,
come
that makes sense.
down and you get a higher valuation. Um One of the things that I talked to you about, in take 1 was IRV, right? This,
Mhm.
so through CCIM, I've had a world-class education in the world of commercial real estate. That combined with, I was a finance major at App State,
Yeah,
so I got enough finance under my
got some
belt, but,
background, yeah.
IRV is commonly taught involving 3 things: income, which for the sake of what we're talking about is net operating income.
Yep.
Um, V is value. Sometimes that will also be equated as the purchase price or potential purchase price.
Hmm.
And R is rate. That is typically associated with the capitalization rate, right?
Okay, yep.
If you have two of the three, you can solve for the other, right?
Yeah.
So I'll give you an example. If you take income or NOI divided by rate, you can get the value or price. If you have the price and you multiply that by rate, you can get the NOI. Um, if you have, I'm trying to think of the third one in my head, and I can't. But it
Yeah,
income is on top.
you can
V
solve
and
for
R
any of
are
the
on the
yeah,
bottom. Yeah, value times rate is
yeah.
NOI. The last one was income divided by value will give you the rate.
Mhm.
So, um, that is often a back of the napkin exercise that people will look at if they are interested in, purchasing property. One of the important concepts in valuation that not a lot of people talk about is highest and best use. There are 4 tests to highest and best use. We're not going to get into that today, but what we are going to say as it relates to highest and best use is every property has one,
Hmm.
and it is always open to change. For example, what we see a lot of in Boone is a change in highest and best use where the underlying land value exceeds the value as improved.
Hmm.
I'll give you an example that I didn't give you on take 1. Um, do you remember where Precision Printing was on Blowing Rock Road, right
Yes.
there next to
Mhm.
Speedway,
Yep.
right? That building was old,
Yeah, falling
tired,
apart.
falling apart,
Yeah.
right? As a building
Mm.
with the land, it doesn't generate the same value as just the underlying land. So the test in highest and best use, Jamie, is just to be thorough with you is does the underlying land exceed the value as improved less the cost of demolition? Because
Mm.
the
Yeah.
building that exists has to be torn down.
Yep.
We are seeing that um, because we have such a scarcity of land issue in
Mhm.
Boone, we are seeing this, land prices go sky high. And so it's just eating the backside off of these buildings because when you own a building, you can do one of two things. You can let it fall in disarray,
Right.
or you can do what is called capital injection. For example,
Mhm.
your husband
Yeah.
made a capital injection into that building. He has reduced the effective age of the building, and it looks and feels like a newer building
Yeah.
than its actual chronological age.
Yeah.
Does that make sense?
Yeah.
Taught you something new today.
I know. I love it.
um, one of the things one last thing before I open it up to questions is why do deals fall apart? Deals fall apart for a myriad of reasons. I I think the better question is why is it difficult for deals to be put together?
Mm.
You know, deals right now are struggling to get put together is because we have unrealistic sellers. We have sellers who think that we're still in 21, 22, where prices were inflated.
Yeah.
And we've had enough market data to show that the price of real estate, or specifically commercial real estate, is adjusting, right?
Mhm. Yeah.
Um, but commonly, uh, deals fall apart in commercial real estate due to financing, not being able to get the loan or loan terms that you know the buyer or developer wants. Inspection issues, something in the building is falling apart. The seller doesn't want to cure it. Environmental issues. They've gotten a phase one environmental report. Um,
Mm.
there's no way to cure the environmental issue that can make a deal fall apart. And then zoning, right? So a
Mhm.
developer is very good at going through what we call the entitlement process, right? The
Right.
process of planning, permitting. And so, if I'm the developer and I go to
Mhm.
town council and I say, or and town council says, no, we don't want that project. Uh, I shouldn't, I won't go buy the property and go
Right.
try again. I'm just going to exit the deal. So I've, I don't even know when we started, but
I
you know,
Yeah.
I want to open it up to you uh, for questions, concerns. I know I've done majority of the talking today as usual, but um,
No, this is
what do you
great.
think?
I think it's really eye-opening because I think that, for me at least, and our listeners who are not well versed on commercial real estate, we tend to think of commercial real estate as simply buying and selling transactions. So it's really eye-opening to hear about all of these different transactions that happen and the relationships that um, are involved. Um, yeah, I think I did have a question. Are these developers primarily taking on these ginormous amounts of debt, or is there private equity involved usually, or is it just a combination?
I think it depends on the size of the project. For
Okay.
example, with the landmark project in East Boone, there's private equity
Okay.
involved. You can imagine that that thing is going to be
I can only
close
imagine.
to
Yeah.
100 million plus
Mhm.
dollars when it's all said and done. I think banks, no matter how good the bank,
Right.
a bank has a limited capacity. So,
Sure.
we in commercial real estate, we talk about this thing called the capital stack. Your
Mhm.
capital stack is your ability to put together equity,
Mhm.
cash, and debt, which is, can be um, l- lenders. It can be private equity. It can be um, first and second position debt. So, you
Mm.
know, what is the total funds needed to get the project done. Most developers in their exploration period are working from a place of cash on hand or profit they've made from a
Other
previous project. Um, I had a question for you.
Yeah.
What is one thing you wish the average person understood about commercial real estate?
Ooh, that's a great question. Well, I think you touched on this, and it's actually something that I wanted to follow up on, is just that commercial real estate, any of these transactions, really draws on the broker's relationships. And that is one of the key things that you bring to a deal, which is why we want to encourage all of our listeners
Yes.
to
Use
utilize a
brokers.
broker. So I think I think in life too, a lot of things hinge on relationships. And so I think that that is one thing that I'm taking away that I would love for the listeners to
Mm.
also take away is that just as in life with these deals, it is really helpful to have someone who has invested in the relationships and knows the players, knows how to make these deals happen. And maybe you can tell us a little bit about how you foster those relationships.
And it's not just the client relationship.
Sure. Yeah.
One of the ways that brokers shine is when there is a problem, they
Mm,
know who to call,
right.
right? They know the inspector, they know the surveyor, they know the right attorney,
Yeah.
right? And so, how do I foster all those relationships?
Yeah.
I try to stay in touch with people, but more importantly, I just try to be engaged in the community. And
Mm.
one of the ways that I feel like I do that best is through the Boone Area Chamber of Commerce.
Shout out.
Shout out
Yeah.
Chamber. Um,
Yeah.
by the way, should we lead or tease
Yeah.
our
I think
what
we should give a teaser.
okay? So if you've gotten this far,
Yeah.
our teaser is next episode. We are drumroll
Drum roll.
gonna have our first guest,
Woo!
and we are very, very excited to announce that David Jackson, the president and
Yeah.
CEO of the Boone Area Chamber of Commerce, is going to be joining us here in the studio, and it's
Live and
going
in
to
person.
be a totally different setup.
Yeah.
Um,
Super excited and
but
thankful.
yeah,
Yeah.
and it's not that we don't enjoy talking about commercial real estate, but what I'm very excited about is his perspective of
Yeah.
commercial real estate.
Definitely.
Um, him and I talk on the regular, but anyways, going back to relationships,
Yeah.
I I just try to communicate effectively
Mm.
and be very responsive. People
Mhm.
that know me know that I'm emailing or texting at all hours of the day. I don't
Yeah.
have a standard work day by any means, but
You don't shut it off at 5.
exactly. I'm not walking out the door, and
Yeah.
but just cultivating and maintaining these relationships. And um, one of the things that I'm very grateful for is, there's no such thing as past clients. Every
Mm.
client remains,
Yeah.
in the fold, and I try to do my best to stay in touch with them and provide value so that I remain top of mind when a problem
Right.
comes up.
So
Um,
what I'm hearing from you is really that the heart behind commercial real estate is community, right?
I think so. I mean,
Yeah.
and you know, it's like I go to town council meetings not because I'm anti town council. I want to be in the know.
Mhm.
I also think that I'm trying my best to foster a relationship with them so that when I come or a client comes,
Mhm.
they say, James, invest time with us to be part of the or at least listen to the conversation. Um, you
Mhm.
know, eh, and I'm not saying that because they should always do what a client of mine wants. I'm just saying that because I I think there's there's great opportunity in just being present.
Yeah,
Does
I
that
love
make
that.
sense?
Yes.
And when you continually show up and you show a group of people that what you're talking about is important to me,
Mhm.
um, because they are also the group that deals with, we talked at the very beginning about the rule book,
Yeah,
the Unified Development Ordinance. They are the body that deals with that rule book. And so as they make changes to it, I want to be abreast of what those
yeah.
changes are. Um,
I have one more question.
keep going.
It's kind of a fun one. Do you remember what type of deal you did on your very first one? Your very first deal ever as a commercial real estate broker?
I don't.
Oh,
Um,
no.
okay, so I got my broker's license in '07, but then I decided to go commercial only in 2008,
Okay,
right?
so that was a pretty quick.
Um, so I got in April of '07. By January of '08, decided to go commercial only. In 2008, did I do any deals? Probably. I one of I don't know if it was the very first one, but one of the first ones that I can remember, because we're talking about
I know, it's a long
18.
time ago.
I
2
have
decades almost.
children better, or
Yeah.
children about that age. Um, the Heather, do you know Heather Reeves? She used to have a pottery, paint your own pottery.
Okay,
Um,
yeah.
so back in the day at New Market Center,
Oh,
there
yeah.
used to be a paint your own pottery place,
Oh, nice.
and
Okay.
Heather Reeves ran it. I can't remember the name, Heather, so please don't chastise me next time you see me. But that lease transaction was probably one of
One of the
the
first.
first
Okay.
transactions that I did. Okay, I want to do two things. A, want to try and wrap things up, but
Yes.
B, I'm going to give you a piece of tea
You know that's my
because I
favorite.
know you love it so much. This past week, we were able to, we were talking about past clients. I had a
Yeah.
past client. His name's David,
Okay.
and he owns a building on NC Highway 105. Where,
Yeah.
do you know where the log cabin building is? Right there by the vet and
Yes,
the,
I know exactly what you're
you
talking
know
about.
which one I'm talking
Mhm.
about. So the former tenant had moved out and gone to another space. David called me up and said, "Hey, we need to release this space."
Oh, okay.
And so we did that.
Oh,
Um,
alright.
got one phone call, one person,
What?
and we showed it. And not to toot my own horn, but and it took a little bit longer than this, but within 15-30 minutes, it was done.
What? That's
Um,
amazing.
so
Is that rare? That's
that
rare.
that's very
Okay.
rare. And I did work longer than 15 to 30 minutes on it in total. Um, Chelsea Mauney, who owns Peak Piercings, she's down
Yeah.
here in
Uh-huh.
on on Howard Street
Yeah, I
right
know
now
exactly
at
where it
the
is.
Emporium, I
Uh-huh.
think. She is gonna be moving into that building
Nice.
on Monday, June 1st.
What? That's awesome.
Yes.
Congratulations.
So,
Everyone go see Chelsea.
yeah, tattoos, piercings.
Yeah.
I think she's gonna have some other users in there, but so grateful to Chelsea,
Yeah.
um, grateful to David and just everyone, working together. Fun fact, did you know that certain uses
Mm,
have difficulty getting insurance? David had to get
mm.
a whole new policy just for
Interesting.
that use. So
Wow.
grateful for David being
Yeah,
willing to go the extra mile.
that's
At,
great.
at the end of the day, Jamie, everyone deserves the right to space, regardless of what they do in
Mm,
that space, and that
yeah.
we are a community of small businesses. We
Mhm.
all do very different things.
Yeah.
Chelsea does tattoos and piercings. I do commercial real estate,
Yeah.
but Chelsea and I are going to do some content together in the next couple of weeks as a
That's awesome.
celebration, but I knew you would love that. We're
Yes.
still going to make our field trip to the office.
Yes, we're so excited.
So Parkers, if you're listening to this, we owe you a field trip,
Yeah.
and any,
Yeah.
I'm just going to open it up to you. Any other questions, concerns?
No, I think I just want to say thanks. This was a great crash course in commercial real estate, and I think that we all learned a lot today.
Okay.
Yeah.
All right. Well, again, to those of you listening, we are on Apple
Yeah.
and Apple Podcasts and Spotify. Share it with a friend. Rate us 5 stars. The one rating that we got on Apple Podcasts said, "Talk about Boone Drug." So
Oh, yeah.
maybe after David, we a
That's a
couple of
great
weeks, or
idea. Yeah.
we can get Jim Furman or someone or Corey with Boone
Yeah.
Drug
That'd
and
be great.
have them talk
We
about.
love your questions and comments,
Yes.
so
So if you want
keep them
us
coming.
to talk about anything commercial real estate related, bring it, and be happy to discuss. All right, Jamie, have a blessed day.
You
Grateful
too.
for you,
Thanks.
and enjoy.